Thank you for checking out Fieldman, Rolapp Associates Municipal Market Update Year-End Review for 2022. Fieldman, Rolapp Associates is a municipal advisor to government. My name is Adam Bauer, and I serve as CEO and President of Fieldman, Rolapp Associates. While this is our 43rd posting, it is our first end-of-the-year review. If you have suggestions or things that you would like to see on an annual basis, send those our way. For those who have provided feedback, we've worked in 100% of that feedback into our monthly MMUs, and we certainly can do that for the end of the year updates. But thank you for taking the time with us. We're providing some high-level updates on issuance volume and how interest rates have changed over the year. First slide is the volume in billions, and you can see how it's changed from 2017 to 2022. A few things to point out that stood out to me is the difference or the change in taxable issuances. Look at 2020 and 2021. You have the 146 and 121 billion. Then you compare that to pre-2020, and that's 39, 30, and 72, and then 2022, 52. So a big difference is the amount of taxable issuance that's taking place. Let me talk about what's happening there. So in 2017, there was a tax bill that got put in place that limited the ability to do advance refundings. And advance refunding is when you refund bonds more than 90 days before their prepayment call date. And that was in certain circumstances, that was allowed to be done on a tax-exempt basis prior to that bill getting passed in 2017. So now along comes 2020 and 21, and the treasury rates and the tax rates dropped to extremely low levels. And so now what was happening was bonds that were tax exempt were being advance refunded on a taxable basis, but because taxable rates were so low, the economics worked on that. And that was really an extraordinary period of time where rates were very, very low, that you could take a tax exempt bond and refinance it on a taxable basis. And a portion of that 146 and 121 are those. But then in 2022, you saw the taxable rates go up. And so you saw that greenish bar decrease. So 2022 looks more like 17, 18, 19, where we don't have extremely low taxable rates, and you don't see as much of that, those taxable refundings there. The other thing I'd point out is between 2021 and 2022, you're essentially looking at like a 20% decrease in volume. So quite a bit less in volume issuance than the prior year. Then this next slide, we just try to break out kind of what made up all of this. And when I talked about those refundings, now go back to 2020 and 21 and look at that, that medium green or the blue color, the 150 and 112. You can see a lot of this was refundings. And then the green is like a refunding and a new money combined. So kind of even enhances that even more. But when rates went up, you can see how those two bars really shrunk. One thing I found interesting about this chart is when it actually came to new money, we only from 2021 to 2022, we only changed from 322 down to 307. So the new money issuance was similar, whereas you really saw the refundings are what were a big change between 2021 and 2022. And that's a direct result of interest rates being high. The other thing is the interest rates were so low in 2020 and 21, refundings that might have typically just fallen to 2022 or a later year were likely pulled forward as advance of as those taxable refundings were done in 2020 and 21. This chart is just a breakdown of what consisted of all the issuances in 2022. Probably doesn't mean a lot to many of us. What I think is going to be helpful is if I show this in a bar chart form over a number of years. For this year, 2022, we'll cover very quickly. It's just a breakdown of kind of what the issuances were. This is the Fed funds rate increases, and I've showed you this on our monthly MMU. But we talked about those rates starting to go up in March of 2022, and you saw that 25 basis point increase. Then you come here and you get this 50 basis point increase. And then you get these large consecutive 75 basis point increases until the end of the year when you get a 50 basis point increase. And so the Fed really has an aggressive fashion increased the federal funds rate. And this chart focuses just on 2022 and tries to illustrate those changes. Now, as investors, so when investors hear inflation and they have bonds, what inflation is one of the worst things that can happen, because you have a when I say bonds, I'm speaking to fixed interest rate bonds. When you have fixed interest rate bonds, any inflation that you get erodes essentially your spending power from that interest payment, and money flowed out of municipal bonds. You can see there's like some modest inflows from time to time, but you saw a large amount of outflows from municipal bond funds. But I think another thing that's important to discuss here, and we're going to try to get more charts on this going forward, is while money flowed out of these municipal bond funds, but let me pause for one. Municipal bond funds are the largest buyers of municipal bonds. When they have outflows, if they don't have cash, they have to actually sell bonds versus being a buyer of bonds. And so not only do you have the primary issuance, the new issuance that's come to market, you also have the municipal bond funds selling bonds and putting those on the market. And so then you have more supply, and that demand, as we're already showing, is less, causing interest rates to go up. And so you saw a lot of that. But there's a change in 2022 that we started hearing a lot more about. And like I said, we don't have data for it yet, and we'll work on getting that. But what we're looking at here is the SMAs, or separate managed accounts, and they are starting to buy more and more of these municipal bond funds. These are oftentimes smaller than municipal bond funds, and so that could be a very good thing for municipal issuers, where you have a less of a concentrated group, you have a larger base available to buy bonds, and hopefully that is a trend that continues, because I think that will be good for municipal issuers over time. Now, finally, this last chart is the increase in that AAA MMD. MMD is municipal market data. It is our benchmark for municipal bonds. That 30-year MMD was at 1.5 at the beginning of the year. And by the end of the year, it was at 3.57. So it more than doubled. And this is the long bond. As I've shown you in some of the other monthly MMUs, the short end of the yield curve has gone up in a greater fashion than the long end of the yield curve. And so we focus on the 30-year here, but you can see how that's changed over time. And I go in more detail on this on the monthly January MMU posting number 44. So I'll be brief here, but this just gives you a general perspective of how this has changed over time. What we tried to show here is just how that yield curve has changed over the course of the year. We have a month ago, a year ago. We even go back 3 years and 5 years. And so if you look at a month ago, that was really the high level. That's that light blue line. What's really good for a lot of us that look to assist with issuances is that's come down. Look at that 118 line, a little bit lower than what it was 1 month ago. So hopefully we're going to continue to see that and have that positive January effect that we oftentimes have seen, where there's inflows into municipal bond funds. And like we've described before, oftentimes a very good time to be issuing bonds. Finally, our last slide is just our registered municipal advisor, all listed on this page. I encourage you to reach out to any one of them. The information we're looking to provide here is general in nature. These individuals can all follow up with you and give you more detailed information on something that you're interested in. So I thank you for your time, and I welcome your feedback. Please reach out to me at my contact information on this slide if you have anything that you'd like us to consider in the future. Thank you.